Okay, we're back with some more property investing, and in this video I'll be going through what I look at on EasyProperties when I want to invest into one of these properties. What figures and what documents do I look at, where do I find it, and also at the end I'll be going over a little example of an X amount invested into a company X, what you can expect to get out, what are the subtractions, the fees and all those things if you don't want to deep dive into the prospectus necessarily or you don't understand it. But let's get into it. Alrighty then, so whenever I invest into EasyProperties, the first thing I ever look at when I select, well, when a new property gets listed, obviously go look at the pictures, go look at what it looks like, go look at the vibe you're getting off of it. A lot of my investing is just because of my research that I'm doing at the moment is I want to see integrated living. So that means living, gyms, lifestyle centers, a pool, clothing, washing amenities, a lot of things that you would normally need to travel outwards or go to town for is in that area. That is a great property in my opinion that just encompasses that, because estate living is not a fad or a trend. It is the proper thing that's happening in South Africa, and a lot of more people are considering living in that manner. So that is one of the first things I'm looking at, because that's just my goal for my property value or for my property portfolio. So once I've looked at the pictures and all the basic stuff, just reading it, like what's it about. In this example, we'll be looking at the blind. You can read their little explanation of what it is. But the second most important thing for me is go look at the location. You can scroll down here and you can go to their location. You can go click there and you can see exactly where it is. I prefer just going straight to Google, and you can change it to satellite view or whatever. But it's very important to see where this property is situated, especially if it's residential. You want to see that it's close to schools, it's close to a hospital, it's in a safe area, or it's in an area where there's maybe an innovation hub or a lot of shops or close to work or offices. You need to go look at those things. It doesn't help you buy a property into a company that's sitting out somewhere in the Kalahari Vistane that like barely anyone is going to live in long term. Okay, so you got to look at that. That is one of the big things and that's also links to property value. Property value goes up when it's close to stuff like that, or it's mid-center of the city, where it's close to like something very bougie, I don't know. So you got to look at those things. After I've looked at pretty much the location, the how can I say, the outside skeleton of this of this property, then I go into the documents that EasyProperties provides for you at the bottom. I mean, you can look at all these videos and read the stuff that they say. So over here you'll see some graphs, which is your average price to suburb and surrounds. That just gives you an idea of the full title schemes and sectional title schemes in that area and around, and the number of property registrations for suburb and surrounds. Same idea. It gives you an idea of how many people are actually investing in that area or in property, whether it's full title schemes, which is like homes, or sectional title, which is in estates or like a flat or something like that. So at the bottom, the very bottom, property documents, you're gonna go look at, and the first thing, always go look at their brochure. Okay, brochure, I don't know how to say brochure. Okay, over there they're gonna give you, that is pretty much what the property, for instance, will give out to customers that like walk in at the front door at reception or something. They want to sell the company. But also in that brochure, you'll find all those things like, is there going to be a gym? Is there going to be a pool? Is there going to be a restaurant? Like stuff like that. So you can read what the property is about and what the vibe is. Then the single most important document you want to ideally go read this entire thing, okay? But it is hefty and it can be a bit much. So I'm going to show you the main things I look at, but the prospectus, that is your go-to. That is the one you really want to look at. So pretty much what the prospectus is, it's literally all the info or the contract that EasyProperties signed with the company or the developers they're buying it from, or the property, and the joint partnership that they have with the property company that's holding these properties. And in this, they'll also say a lot of the details when it comes to the charges, the fees, and also like the rating of the property. So one of the first things that I like to look at is So if you go look also under the property section, you'll see all these valuation sectional titles. And that is external or external auditor, or whatever you want to call them, an external property evaluator. They come and they evaluate these properties for EasyProperties. And then what EasyProperties does is they have an agreement with the company they're buying it from, and that's typically what you see at these EasyProperties when you see EasyProperties discount. So they normally buy it at a better rate. And what I like to do is I go and look in, this is normally like under section 3.4 somewhere. You can just look at the property acquired. But what I like to do is I look at what is EasyProperties actually buying this property for, so the value. And then you compare that to the valuation. You can just look at the EasyProperties discount rate and see, okay, it's 5%, it's good enough. But it's always interesting for me to just see what the difference is in this. The second thing I look at is the scoring tables. So now this is normally under section 3.4.1.2.3, somewhere in the 3s or the points in the 4s. Just go find it. You can Control F, find scoring table. Okay. So the scoring table is a good indication of what the score is of this property in like the most important property, how can I say, valuations. So for instance, the three ones I look most at is value for money, the location, and the rentability and rental demand. So for instance, the value for money, it's all scored out of 7, and that just shows you, I mean, it's in the name, the value of what you're paying and what you're getting out. The location is also very important. That gives you that. If you don't know what to look at when you go to Google Maps, go look at this figure and it'll give you a good indication. And the rentability. Now this one is very important also for me, is you want to know that this property is rentable. It doesn't help you buying a property, but no one wants to rent it because you won't get any cash dollar back, you know, and that is not great. So you need a property that people want to live in, that they want to rent, so that you can get money. Okay. And then the most elaborate but important part for you that you want to go look at is the breakdown of your internal rate of return that you're going to get in your investment. Now you can go to the prospectus and you can go look at the investor IRR calculation, which they do for you. So what they do is they assume 10,000 Rand, they assume a 5-year time horizon, so assuming you're going to be invested for 5 years. They show you all the deductions, all the property fees, the dividends that you're going to get paid out, and just like an assumed IRR. If this is too complex for you, what I'm going to do is I'm going to break it down now, and I'm just going to give you a simple example, and I'm going to give you the most important figures for a 1-year view. Okay, if you understand this, go rather look at this. It's very good. It gives you a good indication of what you can expect to get out, and that is pretty much how they calculate everything. So let's get started. Let's first look at the main figures that they give you so you can get an idea of what they actually mean before we dive into our example. Okay, so for instance, the first thing they give you is the internal rate of return. Now that is in that prospectus I showed you, it's calculated over 5 years, but this internal rate of return is just the average of that you can expect to receive annually. So the internal rate of return considers your dividends and the capital growth together. So evidently what it means is if you're investing 100 Rand and the internal rate of return is 11.7%, you're going to get 11 Rand and 70 cents technically back of your money, okay, after a year, and same. So the estimated net rental yield, that is what they expect to receive in revenue or income from rent, or like people rent the plate, or the people rent the property, they pay obviously rent. Now after all the expenses that they have to pay, all the fixings or whatnot, then that is the estimated net rental yield. Now don't take that as what you are going to get. We're going to deep dive into that now. And then the market valuation, that is pretty much the value that all these properties that they're buying is valued at. But so let's get into an example. Okay, so let's say you investing into property X, and property X, so EasyProperties is buying let's say 6 properties into this like block of flats, like the property in Cape Town, and altogether that entire funding target is, let's say, 4 million Rand. Say the estimated net rental yield is 7.32%. Okay, let's make it an odd number just to make it so you can get the idea. Just considering that the entire property, the funding target was 4 million rand, okay, and the net estimated net rental yield is 7.32%. You're going to take that 7.32%, times it by the total value of 4 million, and in this case you're going to get out 292,800 rand. Now remember, EasyProperties takes 15% of that rent income so that they can obviously fund and run it as a company, do any repairs, do all the like legal stuff behind it, you know, the stuff that you as a property investor don't want to do. They take it out. Okay, so now you have 85% left of that rent income that has been received of that 4 million rand. So you're sitting left with 248,880 rand. That is now what is left to be paid back to investors. Now remember, that's not what only you're getting, because a lot of people have invested into this company. So you're only going to get a fraction of that. So let's assume now you invested 10,000 rand originally of the total 4 million rand. Okay, so that means you have a 0.25% stake in this total company. Now you're going to take that 0.25% and you're going to times it by that 85% worth of rent income, and you should get out 622.20 cents per annum. So that is just to give an example of the dividend that you can expect to receive over the first year. Okay, so just remember that you can't just look at the 7%, the 7.3% net rental yield and think, oh, okay, cool, I'm going to get 7% out. No, you got to look at the amount you've actually invested, okay, and then look at what is actually coming out. For the capital growth, that is a bit more tricky because that all depends on how market values go, how the market goes, how South Africa goes, or wherever the property is. So that, I would say, probably go look at the prospectus, because there they give a good explanation of how they estimate it, but that is a bit more tricky. That's why there's unrealized and realized capital gains. It's a bit of a doozy. The main one that you can definitely determine is your dividend, but the capital growth is a bit more tricky. So, but overall, go look at your IRR, your internal rate of return. You can get a good idea of what you're gonna get out. And I know that was a mouthful because it's like difficult and it's accounting, but it is gonna help you in the end. And it's not that complicated. Make it simple for yourself. Very easy. You write a little Excel sheet and you can quickly calculate it every single time, or just use your phone calculator, to be honest. But that is it. And property investing made easy. So get in on it, because property investing is good, and EasyProperties made it really easy for us because they took out all the hassle. They really made it easy, and I think it's going to be like the next big thing, if not bigger. But yeah, it's really good. If you guys have any more questions on how EasyProperties work, or how the property works, or like just how to like actually get in on it, drop it down in the comments box. But I hope I helped. I hope it was not too confusing, because it can be. But in any case, thanks guys.